Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for the Enphase Energy earnings, ticker symbol ENPH. And what a day it's been on the channel. Our biggest ever swing, $67,000 swing today, 67,000. If you look across my social media platforms, you'll see I shared a trade of $50,000. In fact, it's been $67,000 today. We've managed to sell some mid-range lots, pay off some margin, and we have potentially the bottom now of SpaceX with what was 1.1 million down now to 1.04, I think is correct, because I paid off $67,000 of margin today. So still over $1 million of SpaceX. And it's been an amazing day, absolutely incredible day. I'll share with you on the screen where we were this morning. We were some $110,000 down yesterday, and now we're up 18,000, 19,000, as you can see, in a day. We've paid off margin, we've protected our portfolio, we've improved our position, and it's I hope it goes up. I hope it goes down. I just hope it doesn't go sideways, because if it goes down, I got $60,000 to buy the dip on the way down. I won't be buying anything below. I won't be buying anything above 110 on SpaceX. And if it goes up, we can sell the very top lots, and that's when the average comes tumbling down. But right now we're focusing on Enphase Energy. It's a big one. We are expecting to see Enphase Energy go to $100. That's my target. I gave a target of $90 for Coca-Cola. It literally hit it today and then sold off exactly as expected. I did warn everybody today, do not chase Coca-Cola. It's at its price target today, and it went up so much because everything else went down other than SpaceX. And then, of course, profit was taken out of Coca-Cola, which is the piggy bank, and it went into SpaceX. So I'm looking to find a re-entry to own Coca-Cola again. I've owned $500,000 of Coca-Cola. It's going to $106 now. That's its target for next year, and I'm confident it will do that, but not before a pullback. So we're going to wait for that pullback, because there's far more money to be made right now in SpaceX. So I'm staying there. My average has fallen down, and we've de-risked ourselves, and we are in a wonderful, wonderful position. But not all space stocks are the same. Virgin Galactic is right back down now where I first bought it. It could be a time to buy it once again, but now the landscape has changed. There's bigger and better opportunities with SpaceX. So we'll wait to see what happens. I know what's going to happen, because I reported on it before and told you that we do have government officials buying this. And you may or may not have believed me for a while, but now you know. Today it became a global story that everybody picked up on, and that's why we started to pump. No other reason than that. People started to realize that this is not going to sell off the way they anticipated, and the shorters are going to get absolutely wrecked. So anyway, there's much, much more to come. But right now, we are looking at Enphase Energy. Enphase Energy will report their numbers after the bell in exactly 15 minutes' time. So we're paying close attention to that. We're keeping our eye on it. And then on the half hour, 45 minutes from now, we will have the Enphase Energy earnings. It will be an interesting one. This is one that I think can go to $100. So I'm really quite looking forward to it, seeing what we get today on the earnings call. You just heard a bit of music there. That was a test from Enphase Energy. Audio's coming through well. So I've got everything we need. I'm looking at the terminal, and I'm waiting to see when we get Enphase's numbers. So we're all looking good. I'll keep my eye open for it, and when we get it, I'll bring it to you. But most importantly, it's about the guidance. I'm not expecting great numbers tonight from Enphase, because There can't be any. With interest rates where they are, people are just simply not investing with solar panels on their roofs at the moment. So I don't think Enphase Energy is going to come out with anything particularly exciting tonight. The excitement is reserved for other stocks at the moment, but it's one in waiting. And why we cover the earnings calls is we want to be ready for what comes next. Now, if we see going into the close in the next 15 minutes, SpaceX do go back down, I will be jumping all over it because now I've sold the top lots, not the top lots, so sort of a third of the way up lots. And we're looking for around the 110, even lower than that if we can. And then I can bring my average crashing down. So anyway, it's been a wonderful day. All Discordians have won. YouTube Electrum members have won. We've shared all the trades with you. It's been absolutely tremendous. Now, we have a packed week for you. Tomorrow, of course, is the FOMC report. Let me just double check my calendar. I'm saying that from memory, but yes, it is. The Fed rate decision tomorrow. We're going to get Kevin Walsh present the Fed interest rates, the FOMC. Now, it's going to be a special one. Unlike we've ever done before, we're going to put even more into it than ever. Tomorrow, we're going to have the Fed decision. If rates go up, my margin gets a lot more expensive, as it will for everybody. But I'm not worried about that, not expecting that at all. But it would be a shock for the market. Would actually not hurt SpaceX, by the way. It actually might benefit SpaceX. To be honest with you, everything benefits SpaceX, whichever way. What we just don't want is going nowhere. We want movement. So tomorrow we could have a big day. Well, we will have a big day because tomorrow we're going to cover the FOMC report. And on top of that, we're going to have Sensei provide the cheat sheet, how to trade it, how to look at the numbers, what to get out of SpaceX. Sorry, how to get everything out of the FOMC report. There's a way to trade it. I'll be trading it. Most certainly, I'll be trading it tomorrow. I'll be looking for a big dip on SpaceX if we don't get it tonight. Whatever. And we'll have a big cheat sheet. And then that's not all we've got. We've got inflation figures, GDP. We've got core inflation. We've got so much to share with you tomorrow and Thursday. Now, if that wasn't enough, we've got even more for you as we await Enphase Energy. We've got even more. We've been asked to cover SoFi earnings in the morning. So tomorrow morning, we're covering SoFi earnings. And after hours, as well as during the day with SpaceX trading and reacting to Enphase, we'll be trading and covering SoFi in the morning. And then we'll be doing Microsoft and Meta earnings tomorrow night. 2 earnings tomorrow night, not just 1, 2 at the same time. We'll be covering Microsoft and Meta. It's going to be absolutely fantastic tomorrow. And then on Thursday, it's going to get even more busy. On Thursday in the morning, I haven't quite decided which ones we're going to cover yet. If you are a member of the channel, you can choose. So if you're a member of the channel, you can choose what earnings you would like in the Thursday morning. It's a $10 super chat. And you can choose Ferrari, Altria, Crocs, Shell, BMY, or MasterCard. Thank you very much. I've just received something very important I'm going to share with you. The calendar from Sensei. He's just sharing with me. So I'm going to bring that up to you now. You can get this, and so you can plan for what's coming up. So on Thursday, you can choose MasterCard, Ferrari, Altria, Shell, BMY, Pagaya. Now, after hours, it's going to be a fun-packed night indeed. I think Sensei will be covering Coinbase. Coinbase after hours on Thursday. And then we've got Apple, Amazon, MicroStrategy, lots on Thursday. And on Friday morning, we've got Chevron Oil. So Sensei has just sent me the week ahead. So we're going to bring it up right now. Thank you, Sensei. Now, yeah, this is perfect. Absolutely beautiful. Absolutely fantastic. If I share with you now.
Jeff_France gifted GOAT Trophy X 1000 jewels.
Oh,
GOAT Trophy.
It's been a great day. $67,000 swing. Biggest day ever. Thank you for the GOAT Trophy. Appreciate that. It has been incredible. Right, 9 minutes before the earnings. Let me give everybody now the link to the newsletter, but it gives you the calendar, the trading indicators, the training course, and so on. Let me give that to you now. So here we go. Here is the link in the chat. There it is. It's also pinned to the top. Let me share with you on the screen. This is what it looks like. So you always can see what's coming up. You never need to worry about what's coming up next. Look at this. July 27th and August the 1st. It is fun-packed. 3 central banks, 4 tech giants, and $100 oil. We've got so much. So first of all, let's go through it. Number 1, the Fed rate decision. We'll be live with that. And afterwards, there will be a full cheat sheet. Well, there'll be a cheat sheet before, and then there'll be how to react to it afterwards. All right. We're seeing Enphase Energy fall down at the moment. Let me just come back to that. I'm also keeping my eye on SpaceX for a pump to sell the top lots or a drop to buy some more. In a beautiful position now. $67,000 swing today. I promise you $100,000 day. Getting closer and closer to it, and $1 million trade. All of these things we are getting closer and closer to every day. So you want to ask if you've beaten the market today? Well, I think we can safely say we haven't just beaten the market today. We've annihilated the market today. Look at that. 70 grand, 50 grand down, 100 grand down yesterday, overnight, and now 20 grand up. Just something else, right? Anyway, 7 minutes ago before the numbers come out on Enphase. Then we've got 2 tech earnings, Microsoft, Meta, and Apple and Amazon. These are massive events. We're going to cover at least 2 of those on Wednesday and Thursday. Super Thursday, Bank of England. Bank of England talk about their GDP. That's important to learn how other countries in Europe are coping with inflation and growth. So there it is. Look at that, folks. All laid out for you. Monday, Tuesday, Wednesday, Thursday, Friday. Look at this. Something else. And of course, we're going to cover this. On Friday, Bank of Japan decision. I asked you the other day if you all did a 99-cent super chat, I would get Sensei to do it. Is he going to do it? Well, we'll see. He hasn't confirmed it with me yet. But on Friday, the Bank of Japan decision, bound to be massive. All right. So all of that's coming out over the next few days. If you want the newsletter, it's pinned to the top, and there it is in the chat. If you want to follow me on X and Instagram, there it is. And if you want my Discord, there it is. All right. Let's come back now to Enphase Energy, and thank you, Sensei, for sharing that with me. Absolutely terrific. Now then, I'm looking at the Bloomberg terminal, excuse me, and I'm waiting for the latest information across the wires. Let's see what happens, and we are paying very close attention to it. Okay. We're going to keep our eye open for this. 3:45. I'm just waiting now for the news as it happens. Right. You're welcome, Sensei. Just give me a thumbs up. All right. So we're keeping our eye on Enphase Energy. I don't really care what the numbers say. It's the guidance, because I don't expect anything exciting tonight at all. We have seen a sell-off today, but I don't expect anything too exciting today. It's more about the presentation of where we go next. We're getting some wires coming across. AMD partners with Core Scientific. Sherwin-Williams raised full-year outlook after Q2 tops estimates. Shares jump. Sherwin-Williams just announced Q2 tops estimates. Shares jump. Perplexity brings agentic platform personal computer to Windows. That'll be interesting because tomorrow we've got Microsoft. So there's a little bit of news for you. We're going to cover Microsoft. Oh, that's Thursday, isn't it? Microsoft for you. Anyway, and Meta. So really, really good. A lot going on. I'm really excited. And I'm keeping my eye as well, right, on my own portfolio, as you can see here, because I'm looking to either buy or sell. I'm in a perfect position now, once again, with SpaceX. Lovely. We bought a lot lower, but we have some higher ones as well. Oh, here we go. Numbers coming out. SpaceX losses equal entire valuation of Tesla. Yes, we have that. Energy Transfer declares 0.34 dividend. FIFA's plan to monetize the World Cup crosses a line, says UEFA. Yeah, everyone's disappointed with UEFA, aren't they? American Tower raises 2026 outlook, targets 15% data center revenue growth. American Tower. These are the latest stories coming over the wires at the moment. So back to Enphase Energy. Keep it right there. We're looking for a dip on SpaceX. A significant drop because I am using margin, but I'm using margin to find the bottom, which we may have done now. I'm not worried about all these unlocks. Very exciting. And 3 minutes before the bell. This is going to be a great night. I'm really kind of excited about so many things. Oh, here we go. This is more information. UPS makes up for loss of Amazon packages, focusing on efficiencies, higher margin deliveries. Kineska tops Q2 estimates of Regeneron partnered Arcalist. Rhythm projects 65 billion mortgage originations as it outlines path to double 60 billion third-party AUM. So some good reports coming out on those reporting tonight. But what will Enphase Energy do? Stand by, folks. All right, here we go. So let's have a quick look. We haven't got the numbers yet. We're waiting. But more importantly, I'm waiting for the presentation, which starts in 30 minutes. We've got a bit of time to react to it. This is one of those stocks I think can go to $100. Now, I've been writing all my other calls for the last 4 years. We've beaten the market consistently. Even though we've been down the last couple of days, we've made up for it now, haven't we, with our trades? We called exactly to the penny Coca-Cola. So it's good. I'm really excited now because my portfolio could jump very quickly to $2 million with my 1 million just slightly off now because of the 67 that I sold, 1.03, whatever it is. We could easily do $2 million. My target with a short to medium term is 240, and I would be a millionaire. Live on the show. Remember, I started with $5,000. So here we go. Here is the bell in 20 seconds from now. Let's ring it and let's get all the numbers. Here we go. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Let's go. Right, okay, here we go. Enphase Energy is up 0.5% after hours already. SpaceX doesn't seem to be moving at the moment. The S&P is not doing anything. Virgin Galactic is not doing much. SpaceX is just flat, nothing, no movement. Let's have a look. Qualcomm earnings preview. All eyes on nothing there on AI pivot and softening handset segment. There goes Enphase Energy starting to go down. Royal Caribbean forecasts 17.73. Oh, hang on. It's coming in fast. The Bloomberg terminal is spitting at me. PayPal CEO would evaluate opportunities after reports of Stripe interest. Saudi Prince Al Wade takes stake in Lucid. We've always said that Lucid is all backed by the Saudis. Well, there's your evidence of it. It's why I dumped it. It's ridiculous. What was his name? Peter Rawlinson took all the money out of it. Literally robbed it all. Saudi Prince takes stake in Lucid. So, Enphase Energy starting to move. SpaceX up in the after hours. If we can break through to 120, we're going up to the IPO price, and we can sell our top lots and own the bottom lots and be out of margin. Literally $500,000 of margin could be paid off tonight. Here we go. And there goes Enphase Energy. Enphase Energy is running, but we don't have the numbers. At least I don't. So don't get too excited. I don't see the numbers. Bloomberg terminal is not spitting anything at me just yet. We like to verify our facts. It's moving 2 and a bit percent. I wouldn't get too excited. International paper raised at JP Morgan on improving US line board pricing cycle. There goes Enphase Energy. We're keeping our eye on SpaceX. SpaceX is up 0.12 or 116.60. This is my portfolio, a swing of $70,000 today. It's my biggest ever swing. We're breaking records all the time. I've got 1.06 million invested into SpaceX across all my portfolios. Here's the main part of it here. Whoops. There you go. There's the main part. 666,567 plus the Roth IRA, the ISA, the UK ISA, and the UK brokerage. 666,567. That's a number and a half, isn't it? Anyway, there you go. Back to Enphase Energy pumping. If you want to call 2% pumping, not really. Oil prices extend decline as Iran discusses Strait of Hormuz with Saudi Arabia. Just come out right now. We are getting some news across the wires. Stand by. Let me just read a few things that are coming out now. Celestica projects 20.5 billion revenue growth. Waiting for numbers from Enphase. Lucid jumped 22% on Saudi Prince news. DJ Hayes, look at that. Yes, I wouldn't be chasing that at all. It's the best car, the best electric car in the world, but it was destroyed by Peter Rawlinson, who basically took all the money and paid himself. It was like one of the highest paid CEOs in history, and he did absolutely nothing for the company at all. I don't even know how he gets away with it. But yeah, there you go. Right. We've got 25 minutes to go before the earnings. Caesars Entertainment gap of EPS misses by 0.35. Revenue 299 beats by 10 million. Waiting. I want to keep my eye on SpaceX. I'd love to be able to buy a drop tonight. I've got 60 grand itching in my pocket. Essentially, what I'm looking to do is we sold the mid-range lots. It was great. And we want to buy back much lower than we were. I mean, if I buy back $1 less a share, that's a win. That will lower the average. That will improve things. But I'd like to get it much lower. Now we know it can go to 110. Let's see a 110 somewhere in that region, and I will buy again, and it will put me in a better position. Even if it does go down, it'd be great. Corvo non-gap EPS of 1.64 beats by 0.58. Revenue of 784 million beats by 43 million. That's from Corvo. Shell makes frontier oil discovery offshore Egypt of great importance. Oh, there goes Enphase Energy up 2%. Vichy Properties Q2 earnings on deck. What to expect? We're waiting. We are on standby. We are waiting. SpaceX is down 0.25%. Enphase Energy is up 2%. Let's... Nothing yet. Nothing yet. Pay close attention. Enphase Energy options imply 11.4% move in share price post earnings. Let's see. More coming in now. Here we go. No, I've done that one. Procter & Gamble margin test as investors. I demand. Expand Energy, non-gap 1.33 beats. That's Expand Energy. Revenue of 2.96 billion, beats by 950 million. So an energy sector business up. Skyworks Solution, non-gap EPS of 1.08. Yes, we are seeing Enphase Energy run. Corvo Gap, I mentioned that one. Enphase is now running 5%. Let's have a look. Oh, we're turning green. We're up 5% now, 37, 38. Oh, we're running now nicely. And still got no numbers. Stand by. We've got 22 minutes before the call. Lovely. I will come to live Q&A in a second. I'm going to switch across to members only as well. I enjoy it much more when... I'm able to answer all my members' questions. So let's go to members only. No one gets left behind. Everyone gets their voice shared. Everyone's on the screen. When we're busy, I like to do that. There we go. We are now in members mode on the TV broadcast and on the phones as well. All right. Now then, if you've got a question or a comment, please repeat it and I'll repeat it back now. So if anyone can do that, I'll repeat it back now. Okay. So Enphase Energy, I'm waiting for the terminal to give me some numbers. Oops, it's a beat. It's a beat I did not expect to beat in the current climate. So that's extra good. We've beaten by 47 cents over 40. Yeah, it's a nice beat. It's a nice beat tonight. We'll get the guidance in a second, I'm sure. So I'm looking out for that. Ford non-gap EPS of 66 beats by 31 cents. Nice from Ford. Expect Energy has done well. Corvo has done well. Skyworks Solution beats as well. So it's all beats tonight. Looking really, really good. Great. Right, we're now in members mode. So literally just snipped this at 36.21. Very nice indeed, Chief. Well done. It's a $100 stock in my book. UK investor. I did see your post on X, actually. Didn't get a chance to respond because I've been overwhelmed tonight with thousands of messages from every angle. I did see your comment. Hoping you'd be in it today. You say, will you stay invested in SpaceX until it reaches 240? Oh my gosh, yeah. I did sell some mid-range lots today and free up $67,000 of margin. I made a profit, a small profit of about $400. Not a massive amount of money, but the idea was I was buying on the way down to find the bottom lots. Okay, we bought bottom lots, so we swapped them for the top ones. So we sold these, held the lower ones, freed up $67,000 worth of margin so we can buy on the way down again. Yeah, it's the only game in town. It's the greatest business you can own right now. The gains you can get from SpaceX far outperform anything else out there. So yeah, I'm all in on one stock. I don't need to buy. I don't need to be diversified. I don't need to buy the S&P. I don't need to do anything else. I'm just focusing on one stock, all in with margin. I've also paid off some margin today, and I'm looking for it to pull back. But you know, I mean, unless Coca-Cola today went down to $80. All of a sudden, which it might do, of course, because it's exactly what I expect it to do at some point. Yeah, As you can see, it did sell off today from its high, $90. It hit the target exactly to the penny where I said. Now it's coming back down. And if we see opportunity, this could be used as the piggy bank once again. So, yeah, if we get a big drop to on Coca-Cola, I'll buy $80 for rough number exactly. And then I've got the S&P. If that crashes another 5%, I'll start nibbling in there. But I don't expect it to do that yet. Yeah, really, I'm all in one stock at the moment, and I've got no rush to get out. I've just got positioning to get out of margin, because margin is used to find the bottom. It's not used to live there permanently. Visa or Enphase Energy. Enphase. Right, I've got the details now. Here we go. Here we go. Now I can bring it all to you. This is great. Lovely stuff. Right, here we go. Just landed on the wires off the terminal. Here it is. Enphase non-GAAP EPS of 46 cents. Inline revenue of 291.9 million. Beats by 1.6. I'm actually quite happy about that. I didn't expect anything special tonight, but this is really good. So, beats by 1.6 million. Third quarter 2026 financial outlook. So, for the third quarter of 2026, Enphase Energy estimates both GAAP and non-GAAP financial results as follows. Revenue to be within range of 290 million to 320 million versus a consensus of 304 million, which includes shipments of 130 to 150 megawatts of IQ batteries. This outlook includes approximately 75 million of state harbor shipments. GAAP gross margin to be within a range of 42 to 45, including approximately 2 percentage points of reciprocal tariff impact. Non-GAAP gross margin to be within 44 to 47%, including approximately 2 percentage points of reciprocal tariff impact. Non-GAAP gross margin excludes stock-based compensation expense and acquisition-related amortization. GAAP operating expenses to be within range of 12 million to 124 million. Non-GAAP operating expenses to be within a range of 76 million to 80 million, excluding 44 million estimated for stock-based compensation expense, acquisition-related amortization, and restructuring and asset impairment charges. All right, now then, let's keep my eye on this. We've got SpaceX going up. I was talking to Sensei just before the show started, and it was like, you should be happy your asset is going up. It's not really. I like to buy more and find the bottom and have all my money at the bottom. Then it goes up. And that's what I use margin for, to find the bottom. And that's what I'm chasing. So I'm never happy just making money. Making money is easy. Making profit is easy. Finding the bottom is harder, much harder. But that's what I like to achieve. Okay, so I've done pretty well. I've done very well. It's a 70 grand day today. That's not bad, is it? When you think 5 years ago I had $5,000 and I've done 70 grand in a day. It's not bad at all. But at the end of the day, it's not about the money for me. It's about winning the game. And I love playing the game and winning it. So there you go. Anyway, there's our numbers from Enphase. There'll be more in a few moments. So stand by. Right, in 5 seconds, this might update. This is Enphase Energy. So on the quarter two, it should update, or the quarter past. Let's see if it does. It might not. It might just stay like this. So here we go. 3, 2, 1. Okay. If I refresh it, it might look slightly different. No. There we go. They're just going to give us audio. That's typical of Enphase, but sometimes you know, a lot of companies do give you slides. This company isn't. There you go. I'm going to mute that for you. So there's not much going on. They're just going to have an audio display, an audio presentation. So Enphase running down. Not bad if you can buy it at the bottom again. Exactly. I wouldn't see it going down. I wouldn't be buying it now. I would be buying at that bottom because it was a good beat. But I'm more interested in hearing from the CEO about where we go next. Anyway, I'm also keeping my eye on SpaceX and Coca-Cola if I can get a buy here. Coca-Cola falling since it's $90. It's down nearly $2 now from its top there, but I wouldn't be buying it here. Enphase Energy running up again. So is SpaceX, which is great. If we keep running, of course, I can trim some higher lots and do even better. Right. Now, if you've just tuned in, we've got a huge week for you. We've got the FOMC report. We've got a cheat sheet. We've got how to trade it afterwards. We've got CPI, PPI, GDP, inflation, UK numbers. We've got some massive earnings with Amazon, Microsoft, Robin Hood. We got tomorrow morning SoFi, lots of great stuff. Yeah. Then of course we're preparing for the August the 4th with SpaceX earnings. So we'll be covering it live. Cannot wait for that. Should be absolutely fantastic. So let's get ready. Enphase Energy pushing up 4.5%. Just about 10 minutes to go. Now then, if you've just tuned in, please do tap the like button. Tap the like button. That would be wonderful. How many likes have we got on today's show? Let's have a quick look. 57. Right, 57. There are 241 watching. If we can get everyone to tap the like button. There will be no Discord event tonight because of the earnings. It takes its place when we get that. And then after this, I'm going down to Dallas and I'm going to get stretched. Stretch labs. Very exciting to be stretched tonight. And something I actually really think is very beneficial, especially as you get older, to be really stretched. And you'd be amazed how they can do it. Really is. It's expensive. It's not a cheap experiment. It's not a cheap, inexpensive therapy, but it is really good. It is really, really good. Anyway, that's tonight. So let's read some comments as we wait. We got 10 minutes to go. Let's read these comments. So Starlight, nice. Dumped my 130 for 116. Oh, look at that. Congratulations. Are you one of our Discordians? That's what we teach every day. The lots, it's how to improve yourself. You dumped the 130s and got 116s. Congratulations. Congratulations. That's how to make money. We teach this every day in Discord. JD, you may not have as many members watching this than you expected. And it was not listed in YouTube Investors Live. Yes, it was. Yes, it was. Let's have a look. Have I missed it? I'm sure I just did it. Where is it? Hang on a minute. Did I miss that out? How the heck? I've put it in the wrong... If I put it in the wrong channel... I put it in the announcement. Did I put it in the announcement channel? Yes, I put it in the announcement channel. I apologize for that. All right, then. Let me do this. I'll delete it from there. I put it in the wrong channel, and I put it in the announcement channel. So it should work similar, but it's not. You're absolutely right. Thank you for letting me know. Thank you. That was my mistake. And thank you very much for putting me straight. There you go. I've done it now. Whoops, a daisy. Right, let's try again. Send now. There you go. That's better. Thank you very much, JD Plume. Apologise for that. I put it in the announcement channel, so you're dead right there. Thank you for helping me. Vogel, hi Martin. I need to sell my initial lots first and they're at 140. Does it make sense to sell them now to potentially get back in at a slightly lower price, or should I just wait? Well, if you sell your 140s right now and you buy back right now, on paper, it looks like you've somehow benefited because you might even be in green. You might turn green in 5 minutes, and it might look like you're up. But really, no, you've lost. Well, you've not gained anything, actually. You're no difference. And you can't post a tax loss because you've done it within 30 days. So there's really no advantage. It just messes up your lots. You need to know where you've bought so you can generate profit or losses if you want to wait 30 days. If you just sell now and buy back now, you've not benefited, have you? If you sell now for a loss because you think tonight it's going to go down 10%, that's a benefit because you protected the money at this level. You've saved it. It didn't get depreciated. It didn't depreciate. You held it, and as it came down, you bought it back. Now, that's a winning position. It's not a tax position, but it's an improvement because you know it's going lower, so you go, okay, I'm out, and then you get out, and then rather than your money get less and less and less and less and less, your money stays the same, but the stock price goes down and down and down, and then you buy it back here. So that is definitely a win. Nothing wrong with selling for losses if you think it's going down from where we are now. Do you? I don't. I don't buy into the whole story of the market's going to collapse on unlocks. If I did, I could sell my top lots, all of those out of the money. If I could wait 30 days, would be even better. But you're not going to be able to wait 30 days, are you? So anyway, there you go. That's how that works. Does that make sense? I hope so. Let me answer more questions. We got 7 minutes to go. Sean Morris, how do you navigate trading per hours and during hours? Seems like if I trade before the bell, I always take a hit. Well, essentially, the market trades if you're on Robinhood 24 hours a day, 5 days a week. Now, if you want my link to get Robinhood, that's what I use exclusively. I'm not sponsored by them. There's Robinhood USA and there's Robinhood UK. So if you're in the USA or UK, you get free shares. I get free shares, you get free shares, everybody wins. With Robinhood, most stocks, not all, but most stocks trade 24 hours a day, 5 days a week. Now, when you're trading outside of when you're trading outside of trading hours, you've got to set limit orders. If you don't, you'll always lose money.
€2 through Super
because
Chat.
of the lack of
Check Bloom Energy.
liquidity.
Huge beat and 10% up. Smile.
Oh, check Bloom Energy. One of my members has requested I check. Thank you for the super chat. Bloom Energy. Bloom Energy is the name of the game. We've spoken of this. It is, but it's only back where it was this morning. So Bloom Energy dropped all the way down, and it's popped tonight all the way back up. That's nice, but you're kind of only where you were before. But anyway, thanks for letting me know. That's great to see. Congratulations, anyone who's in Bloom Energy. I wouldn't be chasing now though, or anything like that, or even Enphase Energy. Wait for it to come back down. Anyway, so there you go. I hope that answers your question. If you're trading out of hours or overnight, even worse, you need to set limit orders unless you really understand the movement of the stock, the movement of the market. All right. Anyway. SpaceX is going up. 70 plus grand today. What a day. You don't get days like that every day. It's running as well. It's running as well. 117.12 now. Great. Really, really great. So thank you, Martyn. I invested long-term with SpaceX and very excited. Yeah, I want to be clear, because I don't join a fan club or anything like that. I don't ever say I'm investing long time at all. I only buy businesses that I can hold for 10 years. So I'm already a long-term investor. However, I have proved mathematically you make a lot more money by trading. I'm an investor. I buy great businesses, but I always use all the tools in the toolbox to find the bottom, never the top, always the bottom, and trade them and macro conditions, inflation, interest, everything else that's going on around the markets. Just by buying and holding for 20 years is okay, but you're more of a collector and a saver than an investor. I'm definitely an investor and a high frequency trader. So I'm not a fan of just buying and holding, but I'm glad you are, because, it's a great business and I'm buying it. And I will be holding a big position. Don't get me wrong. I've got no intention of selling my entire position because there's no real price target at the moment. 240 is within short, medium term. And then we've got 4, 5s, 8s. I want to build a massive multi-million-dollar position in SpaceX. I think the growth is far greater than anything else you could be in. So I'm not going to be up 10% and then go, let's buy some Coca-Cola and then have to buy SpaceX back. The idea is I'm trading to buy the bottom of SpaceX. That's what I'm doing. And that's what I'm achieving today. So that's what I'm doing. Anyway, finally figured it out. Great stuff. Gold coin. Thank you, Alex. Not on Discord. Keep screwing up the process. If you want me to help you now, I will onboard you. I'll white glove service you through the system. Felt good to see the profile go green today. Now let's make some real profits when the thing takes off. That's it. Wake up. Potato family, we got 2 minutes ago. Honestly, I was pretty nervous with SpaceX. I'm not nervous at all. I told you a week ago that governments were buying it, US government representatives, and today the information was available to all, and you saw the result. So when you know, you know. When you do the homework, you know, and that's why I put 1.1 million. I wasn't remotely concerned. Evening Martyn, August 4th and 6th could be the big days for SpaceX. Exciting stuff and good timing for certain other space stocks. Indeed it is, Ethan. Absolutely right. We'll cover it live. We'll cover the earnings of SpaceX. We'll cover the unlocks, everything that you need to know. Have a limit buy set at 92, maybe tonight, lucky night. At 92, you put an order to buy SpaceX at 92. Why 92? Just some random number. Limit buy, yeah. Okay, you want to buy SpaceX at 92. Okay. Unlikely. I've got to be honest. Alex, hello, I'm down 8K on SK Hinks. I did warn everyone, didn't I? Not to buy that. We covered the IPO. Well, it was more of an introduction to the US market than an IPO. And when it became more liquid, it dumped in Hong Kong, and then now it dumps here. We did say that. You may remember me saying that live on the show. Yes, sell or no. I couldn't say, Alex. I don't know your position. I'm not surprised it's gone down. That whole sector is not where I put my money right now. So I couldn't tell you. If you want to join us on Discord, you can phone in, have a proper conversation about it. If you become a gold member on YouTube, you get a 1 hour private call with me every month, and we can do that. Hey, we got a marshmallow, not one of the magic ones, I'm afraid. Bloom Energy should get more love here. I think it's way better than Enphase. Well, Finn K, we could look into it and put the Lucasade army together, and you never know. Anything's possible. Where does SpaceX need to get for you to sell and re-enter SPCE? Well, I'm not really going to sell SpaceX. I'm going to simply sell top lots to buy more bottom lots. The idea is, Wadey, I want to buy multi-millions of SpaceX valuation. I could really be all in one stock. I've got no issue with that. It's the stock that's going to make the most money. So I just follow the money. What number would get me to buy Virgin Galactic? Well, I'd need lots of macro conditions to line up. Oh, hang on, Enphase. Not paying attention. Okay, let me now mute the audio. It's time. I nearly forgot there for a minute, didn't I? Right.
listen-only mode.
Here we go.
Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star and then 1 on your touch-tone phones. To withdraw your questions, you may press star and 2. Please also note this event is being recorded. At this time, I'd like to turn the floor over to Zach Friedman with Enphase. Please go ahead.
Good afternoon, and thank you for joining us on today's conference call to discuss Enphase Energy's second quarter 2026 results. On today's call are Badri Kothandaraman, our President and Chief Executive Officer, Mandy Yang, our Chief Financial Officer, and Raghu Belur, our Chief Products Officer. After the market closed today, Enphase issued a press release announcing the results for its second quarter ended June 30, 2026. During this conference call, Enphase management will make forward-looking statements, including but not limited to statements related to our expected future financial performance, market trends, the capabilities of our technology and products, and the benefits to homeowners and installers, our operations, including manufacturing, customer service, and supply and demand, anticipated growth in existing and new markets, including the TPO market, the timing of new product introductions and enhancements to existing products, and regulatory, tax, tariff, and supply chain matters. These forward-looking statements involve significant risks and uncertainties, and our actual results and the timing of events could differ materially from these expectations. For a more complete discussion of the risks and uncertainties, please see our most recent Form 10-K and 10-Qs filed with the SEC. We caution you not to place any undue reliance on forward-looking statements and undertake no duty or obligation to update any forward-looking statements as a result of new information, future events, or changes in expectations. Also, please note that financial measures used on this call are expressed on a non-GAAP basis unless otherwise noted and have been adjusted to exclude certain charges. We have provided a reconciliation of these non-GAAP financial measures to GAAP financial measures in our earnings release furnished with the SEC on Form 8-K, which can also be found in the Investor Relations section of our website. Now I'd like to introduce Badri Kothandaraman, our President and Chief Executive Officer. Badri?
Good afternoon, and thank you for joining us today to discuss our second quarter 2026 financial results. We reported quarterly revenue of $291.9 million, shipped 1.59 million microinverters and 113.8 megawatt hours of batteries, and generated free cash flow of $25.9 million. Our Q2 revenue included $84.3 million of safe harbor revenue. We exited the quarter with channel inventory normal for batteries and slightly elevated for microinverters. On a GAAP basis, we delivered gross margin of 60%, operating expense of 42.3%, and operating income of 17.7%, all as a percentage of revenue. On a non-GAAP basis, we delivered gross margin of 46.8%, operating expense of 27.3%, and operating income of 19.4%, all as a percentage of revenue. Mandy will cover the financials later in the call. Our global customer service NPS was 80% in the second quarter as compared to 82% in the first quarter. Our average call wait time remained approximately 2 minutes. We also made our AI assistant available to 1.5 million homeowners worldwide. This gives our customers faster access to personalized system-specific support and making their energy systems easier to understand and manage, ultimately reducing the number of calls. Let's cover operations. In the second quarter, we shipped approximately 1.58 million U.S.-made microinverters and battery inverters from our Texas and South Carolina manufacturing facilities and booked the associated 45X production tax credits. We also shipped 43 megawatt hours of IQ batteries from our Texas facility in the second quarter. We offer IQ batteries that meet domestic content and FIOC requirements, helping lease and PPA customers qualify for ITC bonuses. Let's now cover revenue and regional performance. Our global Q2 revenue increased 3% compared to Q1. Our global sell-through was approximately flat as compared to Q1, as growth in Europe offset the softness in the U.S. Our revenue mix was 78% from the U.S. and 22% from international markets. In the U.S., revenue declined 3% sequentially. Safe harbor revenue increased to $84.3 million in Q2 as compared to $34.5 million in Q1. Excluding safe harbor revenue, the U.S. revenue declined primarily due to us under shipping into the channel. Our U.S. sell-through in Q2 decreased 7% as compared to Q1. Excluding one-time orders in Q1 that did not recur in Q2, the sell-through was approximately flat sequentially. Our Q2 26 sell-through declined 34% as compared to 1 year ago in Q2 25, reflecting continued pressure from higher interest rates and transition following the expiration of the 25D tax credit. Third-party market reports suggest that the broader U.S. residential solar market has stabilized, with the industry-wide permits in June increasing 4% from May, and upstream sales activity rising 5%. Both remain about 30% below prior year levels. Higher electricity cost markets are performing better, while several Sunbelt states remain under pressure. The stronger industry-wide signals are for storage and commercial solar. National residential battery attachment remains near 40%, with materially higher levels in key markets, while the U.S. commercial solar permit activity increased 36% year-on-year in June. Taken together, these third-party data points suggest that the next phase of U.S. market growth will be shaped by storage economics, the commercial demand, financial availability, and utility rates. In Europe, our revenue increased 35% sequentially in the second quarter, while sell-through grew 30% with strong performance across both solar and batteries in multiple markets. The growth was supported by higher power prices as well as accelerating battery adoption. As we have discussed, Europe is increasingly becoming a battery-led market. As self-consumption, dynamic tariffs, and VPPs gain importance, the company that owns the battery relationship is well positioned to expand over time into the broader home energy system, including solar, EV charging, and VPP. In the Netherlands, our battery activations increased approximately 102% from the first quarter, as rising export penalties and the planned phase-out of net metering at the end of 2026 strengthen self-consumption. In France, lower feed-in tariffs are similarly shifting the market towards self-consumption and driving greater interest in batteries, particularly with new solar installations. The battery activations in France increased approximately 34% sequentially. In Germany, the growth was broad-based, with both microinverter and battery activations increasing approximately by 35% and 27% respectively. We are intensifying our focus on battery retrofits in both Netherlands and France, where we have a combined install base of nearly 900,000 Enphase customers. Building on the success of our initial programs, we have increased the cadence of homeowner events and direct marketing campaigns. Our newly established inside sales team, supported by an improved lead management platform, is helping convert this demand into revenue. We also showcased our 5th generation battery at Intersolar Munich, where customer feedback was positive, and we expect initial shipments before the end of this year. Let's now discuss our outlook for the third quarter. We expect revenue of $290 to $320 million, representing approximately 5% growth at the midpoint. Our Q3 revenue guidance includes approximately $75 million of safe harbor revenue. We are currently over 70% booked to the midpoint of our guidance. We expect global sell-through in Q3 to increase 10% as compared to Q2. Distributors remain cautious amid broader macroeconomic uncertainty, including interest rates, and our guidance assumes modest undershipment relative to sell-through. For batteries, we expect shipments between 130 to 150 megawatt hours as momentum continues to build in both US and Europe. As reciprocal tariffs have moderated somewhat, we reduced battery pricing in late March, and we expect to take further targeted pricing actions as necessary to improve system economics and support demand. Turning to Safe Harbor, we have executed year-to-date agreements with third-party owners totaling approximately $1.1 billion, $202 million under the 5% ITC Safe Harbor method, and $878.6 million under the physical work test beginning of construction method. These agreements provide two important benefits. They secure meaningful multi-year volume for our microinverter and accessory business. And second, they create a strong foundation for future battery attach opportunities as these systems are installed from 2028 through 2030. Moving to financing, Propel is entering a new phase of growth. Just to remind you, Propel is a TPO offering from Sole Source Solutions that combines Enphase equipment, loan financing provided by Tribeam Financial through the Concert Finance platform, and national distribution through Green Tech Renewables. Purpose-built for the long tail of installers, Propel has expanded from 4 states to 6 states with recent launches in Pennsylvania and Colorado, and plans to reach a total of 12 states during the third quarter. Installer participation has grown to about 290. The Propel originations are running at approximately 200 per week, with battery attachment at roughly 75%. We expect this will begin to grow again as installers in new states start to ramp up. Sole Source is targeting 500 originations per week by the end of the year and scaling by securing sufficient warehousing capacity and tax credit buyers. In today's higher interest rate environment, Propel offers homeowners and installers a compelling alternative to conventional solar loans and can help restore a meaningful portion of the cash and loan market affected by the 25D expiry. Let's talk about products, starting with IQ batteries. We showcased our 5th generation IQ battery G5 at Intersolar Munich in June, where it received a strong response. Built from stackable, AC-coupled 5 kilowatt-hour modules that can scale up to 30 kilowatt-hours in one stack, the G5 uses 100 ampere-hour prismatic cells and is designed to deliver 50% higher energy density than our 4th generation battery at roughly 40% lower cost per kilowatt-hour. When shipments begin in the 4th quarter of 2026, we believe the IQ battery G5 will stand out as one of the few truly stackable AC-coupled battery platforms in the market. Its combination of lower cost, flexible sizing, strong performance, high quality, high serviceability should make it highly competitive across the US, Europe, and Australia. We are also making good progress on our commercial battery called IQ Vault, targeted for both 3-phase 208 and 480 volt market. The first product, called IQ Vault 80, is an 80 kilowatt-hour battery, again 3-phase 480 and 208 volts with 40 kilowatts of continuous power. Basically, it is a 2-hour battery. Each outdoor cabinet uses 5 field serviceable 16 kilowatt-hour LFP modules built with 314 ampere-hour prismatic cells, and up to 25 cabinets can scale the system to 2 megawatt-hours. The 480 volt 3-phase configuration is designed for larger commercial building, while the 208 volt 3-phase configuration will address small commercial and multifamily properties, including applicable California projects driven by Title 24 requirements. The distributed architecture provides module-level fire suppression and is designed for self-consumption, peak shaving, time of use, VPP, and backup. We have completed the functional system demonstration in the last quarter, and we expect to open pre-orders soon, with initial shipments planned for Q1 27. Turning to microinverters, we launched our GaN-based IQ9N residential microinverter across the US and key European markets in June, followed by Australia and New Zealand earlier this month. We are also gaining traction in the US commercial market with several promising national opportunities advancing with large retail customers. During the second quarter, we began shipping the IQ9S 3P microinverter, our highest power microinverter till date, 548 watts, based on gallium nitride GaN for 480 volt systems. This is designed to support solar panels up to 770 watts. With US manufacturing, domestic content eligibility, and FIOC compliant products, we believe our commercial business is well positioned for continued growth. We recently opened pre-orders for our smart thermostat, a new control point for the Enphase Energy system. By bringing HVAC into the system, Enphase can optimize one of the home's largest energy loads alongside solar and batteries to improve savings, preserve backup capacity, and support VPP. The integrated display on the device also gives homeowners a simple way to view their solar, battery, and home power live from inside the home. We expect shipments next month. Moving on to EV charging, we are making strong progress on the DC-based IQ bidirectional EV charger, which we showcased at Intersolar Munich. Built on our GaN power platform, this is designed to support both 400 volt DC and 800 volt DC EV architectures and deliver up to 11.5 kilowatts of bidirectional power. ISO standard 15118-20 enables standardized communication between the vehicle and the charger, while our expertise in utility interconnection, grid code compliance, and distributed energy management supports V2H backup, V2G, and use cases like green charging. We are collaborating with 3 leading automotive OEMs in the US and 1 in Europe, with additional engagements underway. Subject to the successful completion of applicable compliance testing, we expect to begin pilot shipments in the fourth quarter, alongside vehicle launches from 1 US OEM and 1 European OEM. Finally, let me provide a more detailed update on our IQ solid-state transformer, or IQ-SST. The rapid build-out of AI infrastructure is reshaping data center power architecture as rack densities rise from approximately 150 kilowatts today towards 1 megawatt and beyond. Delivering power at that scale will require a fundamentally more efficient, responsive, and reliable way to move medium voltage power directly to the compute rack. IQ-SST is designed to meet that need by converting 13.8 kV or 34.5 kV medium voltage AC directly to 800 volt DC through a modular single-stage architecture. At the core of the platform is our IQ-SST power module, which utilizes our predictive control enabled by the custom silicon, GaN, which enables high-frequency switching, and innovation in medium voltage transformer design. Built on more than 20 years' experience in distributed power electronics, we are targeting approximately 98.5% efficiency, 5 nines reliability, and sub-millisecond response time. That response time is a key differentiator. AI workloads can create rapid swings in power demand, and IQ-SST is designed to respond in real time to help stabilize the load as seen by the data center power system. This could allow most of the energy storage to be centralized in a BESS located in the data center's black space rather than placed beside every compute rack, freeing up valuable white space. This configuration would utilize a second SST for the BESS, effectively doubling our data center opportunity. For customers that still require storage near the rack, the same platform can also support a DC-DC configuration that charges and discharges a local high C-rate battery to help manage dynamic AI loads. U.S. manufacturing and a FIOC-compliant supply chain add another important layer of differentiation. They give customers greater confidence in supply continuity, product traceability, and the ability to deploy at scale without relying on restricted foreign entities. For hyperscalers and data center operators making long-lived infra decisions, we believe domestic manufacturing, resilient sourcing, and a clear path to high-volume production can be as important as product performance. Our new and existing customer engagements continue to deepen. We have advanced a few of these opportunities to the RFI and RFP stages, representing potential demand totaling multiple gigawatts. These engagements are directly shaping our roadmap across power level, input voltage, footprint, cooling, battery connectivity, and serviceability. Importantly, we have been able to address evolving customer requirements without changing the fundamental IQ SST power module, underscoring the flexibility of our platform. We have also made substantial technical progress over the last 3 months towards a fully working system later this year. Our team has now grown to about 120 people. We have begun testing the second revision of the IQ SST power module, and the results give us confidence that the next revision can become our production candidate. We have completed the build-out of our medium voltage lab and validated the medium voltage transformer design. We are now optimizing it for manufacturability and cost. This work has already generated meaningful IP, particularly around the transformer. At the system level, our power modules are connected in series on the medium voltage input side and in parallel on the regulated 800 volt DC output side. Managing stability and balancing power across the series stack are mission critical. Through modeling and hardware experimentation, we have demonstrated that our proprietary Droop control architecture can robustly manage the series stack and maintain balanced power across the modules. Specifically, we have demonstrated 15 IQ SST power modules operating in series and are now advancing the complete first generation system, including the thermal architecture, rack level controls, and mechanical design. The first generation platform is designed to scale from 1.25 megawatts to 2.5 megawatts across 13.8 kV and 34.5 kV configurations. We remain on track for a fully working system later this year, customer pilots beginning in 2027, and commercial shipments in 2028. Beyond AI data centers, we are evaluating the broader applicability of the IQ SST platform across utility scale solar, storage, and DC fast charging. In each of these markets, we believe IQ SST can connect directly to medium voltage AC, eliminating the need for a conventional transformer and simplifying the overall power architecture. This can reduce the number of stages, system complexity, footprint, and cost while preserving the same core advantages of high efficiency, fast control, and modular redundancy. While these applications are at an earlier stage, we believe that the same underlying platform can ultimately support a much broader set of power conversion markets. Let me conclude. Our next phase of growth starts with residential energy systems. Across the US and Europe, IQ9 microinverters, our upcoming 5th generation battery, and the IQ bidirectional EV charger significantly expand the value of the Enphase home. Together, they position us to win new battery-led systems deepen engagement with our install base, and address standalone bidirectional EV charging. In the U.S., prepaid lease programs like Propel add an important financing lever to support that growth. Beyond residential, we are expanding into small commercial energy systems. Our three-phase microinverter portfolio now spans both 208 volts and 480 volts applications. The IQ BART with the 80 kilowatt-hour battery adds commercial storage, and our EV charging portfolio broadens the opportunity further. Together, these products give us the foundation for an integrated small commercial energy system spanning solar, batteries, EV charging, controls, and energy management. The next frontier is data center infrastructure that we talked about with IQSST, and the same architecture can extend into utility-scale solar, battery, and high-power DC fast charging. These markets require the same fundamental capabilities: direct medium voltage connectivity, high efficiency, fast control, modular redundancy, compact design, and competitive system cost. Our expansion from residential to commercial, to data centers, and ultimately to utility scale is built on the same core technology foundation: single-stage power conversion, custom silicon-enabled control, high-frequency GaN switching, and innovation in transformer design. We believe this positions Enphase to compound growth across progressively larger markets while leveraging the same differentiated architecture, technology, and execution capabilities that established our leadership in residential energy systems. With that, I will turn the call over to Mandy for her review of our financial results. Mandy?
Thanks, Badri, and good afternoon, everyone. I will provide more details related to our second quarter of 2026 financial results, as well as our business outlook for the third quarter of 2026. We have provided
Count how many times she says dollar.
To get financial measures in our earnings
How many
release
times
today,
she says
which
dollar.
can also be found in the IR section of our website.
She says
Total
it a lot.
revenue for Q2 was $291.9 million. We shipped approximately 725.2 megawatts DC of microinverters and 113.8 megawatt hours of IQ batteries, above the high end of our battery guidance. Q2 revenue included $84.3 million of safe harbor revenue. As a reminder, we define safe harbor revenue as any sales made to customers who plan to install the inventory over more than a year. Non-GAAP gross margin was 46.8% in Q2, compared to 43.9% in Q1. GAAP gross margin was 60% in Q2, compared to 35.5% in Q1. GAAP gross margin was positively impacted by 15.6 percentage points for the IEEPA tariff refunds received. Reciprocal tariffs negatively impacted gross margin by 2 percentage points in Q2. Non-GAAP operating expenses were $79.8 million for Q2, compared to $77 million for Q1. The increase was driven by higher investment in R&D spending. GAAP operating expenses were $123.5 million for Q2, compared to $130 million for Q1. GAAP operating expenses for Q2 included $39.7 million of stock-based compensation expenses and $4 million of acquisition-related expenses and amortization, restructuring, and asset impairment charges. On a non-GAAP basis, income from operations for Q2 was $56.7 million, compared to $47.3 million for Q1. On a GAAP basis, income from operations was $51.5 million for Q2, compared to loss from operations of $29.6 million for Q1. On a non-GAAP basis, net income for Q2 was $61.5 million, compared to $62.3 million for Q1. This resulted in non-GAAP diluted earnings per share of 46 cents for Q2, compared to 47 cents for Q1. GAAP net income for Q2 was $36.1 million, compared to GAAP net loss of $7.4 million for Q1. This resulted in GAAP diluted earnings per share of 27 cents for Q2, compared to diluted loss per share of 6 cents for Q1. We exited Q2 with a total cash equivalents, and marketable securities balance of $937.7 million, compared to $930.6 million at the end of Q1. In Q2, we generated $40.3 million in cash flow from operations and $25.9 million in free cash flow. Capital expenditure was $14.4 million for Q2, compared to $19.9 million for Q1. As of June 30, 2026, after monetizing the PTCs generated in 2025 and Q1 2026, we had approximately $193.5 million of PTCs on our balance sheet. This included $108.3 million related to US-made microinverters shipped to customers in 2024 and $85.2 million related to shipments in the first half of 2026. We elected direct pay for the 2024 PTCs, which are expected to be refunded through our 2024 tax return filed in April 2025. However, we have limited visibility into the timing of receipt of the $108.3 million due to IRS processing. As a reminder, in March 2026, we revoked our direct pay election. Going forward, we plan to sell PTCs on a regular basis to better align cash inflows with expenses. We expect these sales to be part of our normal course of business, and the impact of this approach is included in our quarterly gross margin guidance. We announced a tax credit transfer agreement to sell $150 million of PTCs generated in 2026 to a leading financial institution, with 4 quarterly payments from April 2026 to January 2027. We received tariff refunds of approximately $41 million from U.S. Customs and Border Protection, or CBP, in the second quarter, with another $11 million received after the quarter end. Second quarter GAAP results were impacted by $52 million, of which $45.4 million was recognized as an increase to GAAP gross profit, $1.6 million was recognized as GAAP interest income, and $5 million was capitalized as a cost of inventory as of June 30, 2026. We have submitted additional refund claims that remain subject to CBP's review and validation. Now let's discuss our outlook for the third quarter of 2026. We expect Q3 revenue to be in the range of $290 to $320 million, including shipments of 130 to 150 megawatt hours of IQ batteries. For the remainder of 2026, we anticipate recognizing $136.2 million of safe harbor revenue, with $75 million in Q3 and $61.2 million in Q4. We expect GAAP gross margin to be within a range of 42 to 45%, including approximately 2 percentage points of reciprocal tariff impact. We expect non-GAAP gross margin to be within a range of 44 to 47%, including approximately 2 percentage points of reciprocal tariff impact. Non-GAAP gross margin excludes stock-based compensation expenses and acquisition-related amortization. We expect our GAAP operating expenses to be within a range of $120 to $124 million, including approximately $44 million estimated for stock-based compensation expenses, acquisition-related amortization, and restructuring and asset impairment charges. We expect our non-GAAP operating expenses to be within a range of $76 to $80 million. With that, I'll open the line for questions.
Ladies and gentlemen, at this time, we'll begin the question and answer session.
96.
To ask a question, you may press star and then 1 on a touch-tone telephone.
Is this call in?
If you are using a speakerphone, we do ask that you please pick up your handset before pressing the keys. We do ask that you please limit yourselves to a single question and 1 follow-up. To withdraw your questions, you may press star and 2. Again, that is star and then 1 to join the question queue. At this time, we'll pause momentarily to assemble the roster.
She sounds about 8 years of age, doesn't she? $1 million.
Our first question today comes from Praneeth Satish from Wells Fargo. Please go ahead with your question.
Okay, thanks. Good afternoon, everyone. Maybe on SST, recognizing it's early, but just conceptually, how are you thinking about balancing a margin capture versus market share adoption? I guess based on our understanding, if you include 45X credits, the SSTs could potentially support very, very high gross margins. But then on the other hand, you've talked about in your prepared remarks, ultimately selling the product into other markets like utility scale solar, which presumably would imply setting maybe a more competitive ASP. So just trying to understand at a high level how you plan on navigating that.
Yeah. We're not going to give you actual numbers, but we are going to tell you how we are thinking about it. We are going to be extremely competitive. But we are going to clearly focus on our value drivers. There are a lot of competitors also developing SST. So therefore, the focus for us is what does Enphase do different and better compared to the competition. Our value drivers are like what we stated, fast response times. And because the SST can respond within a sub-millisecond, we think the battery storage can move to the facility space, which is called the data center black space. That will be a key differentiator for our solution. In addition, our modularity, our redundancy, reliability, U.S. manufacturing are all other value drivers. So, like what I said, I'm not going to give out numbers, but I just told you how we are thinking about it. Plus, you are correct on the 45X PTC. We are finalizing those details, but that will also help us to be highly profitable.
Got it. And then maybe just shifting gears on Propel. So last quarter, if I remember correctly, you said originations were running at roughly 200 per week. And then it sounds like they're still tracking at around that same level today. So should we interpret, the relatively flat sequential trend there as a function of financing capacity or other supply side constraints? And I guess what's going to be the driver there that gets you to 500 originations a week by year end? Is that based on demand increasing or just based on your partners increasing financing capacity? Thank you.
Yeah, I think we were clear. We said, Propel is running its pilot. We started with 4 states. We were conservative. And sole source is basically responsible in what they do. They are in the process of securing, financing so that they can scale every phase deliberately, properly. So it is simply a function of how many states we are in. For example, if I look at the first 4 weeks of this month, would say the numbers are running a little bit higher than the 200. So what we are going to do is to scale it to 12 states. Today, Propel is in six states right now, and Sole Source is going to scale it to 12 states by the end of Q3. And we expect a more aggressive ramp in Q4. And their target is to exit the year with 500 originations per week.
Got it. Thank you.
Our next question comes from Brian Lee from Goldman Sachs. Please go ahead with your question.
Hey, everyone. Good afternoon. Thanks for taking the questions. I guess, Badri, for you, I'm curious, the safe harbor revenue, it's pretty significant both in the third quarter, and appreciate you giving us the fourth quarter number as well. And it seems to be tracking higher than you've been guiding to. So, is this market share gain amongst TPOs, or maybe can you speak to what's driving that momentum? And then I had a follow-up.
Yeah, I think we have, like what we said, we have strong relationships with a lot of our TPO partners. And some of our TPO partners are healthy. They are supported by a strong balance sheet in their parent companies. There are some new TPO partners as well who I'm sure you will see they're going to show up. So basically, it's just the confidence that they have in either pursuing a 5% safe harbor strategy or a PWT, which is the physical work test safe harbor strategy. And for us, I think we said approximately $1.1 billion is the agreements that we have executed till date. Of that, the $202 million under the 5% method and $878.6 million under the physical work test. So it's just we have strong relationship with the TPO guys.
Fair enough. And then maybe just related to that, you sounded a little bit more positive on kind of a return of growth in resi, even in the near term. But if we adjust for the undershipping in 2Q and exclude safe harbor, you're implying flat revenue from 2Q to 3Q. You're still undershipping, you said. So I guess why undership in 3Q when demand is seemingly improving based on some of your comments? And then how should we think about also 4Q seasonality? Do you expect to still be undershipping into 4Q? Should 4Q revenue, including safe harbor, be higher than 3Q, including safe harbor all in? Thank you.
Yeah. So basically, just to break it, our Q3 guidance at the midpoint is about 305. Out of that, $75 million safe harbor. So core revenue of 230. Let's say I expect sell-through to be 10% higher in Q3. We are talking about a sell-through approximately in the 245 million range. And we are talking about a modest undershipment of about $15 million. We are just cautious, and we'd like to make sure we have a healthy channel inventory. Like we focused Q2 on getting healthier in the channel. That's why we said we are fine on batteries and slightly elevated on micros, and we're going to bring that down. But if you look at apples to apples, the core revenue, if you say the core revenue from Q2 to Q3, excluding safe harbor, that is increasing by approximately 10+%. And in Europe, as you know, Q3 is usually the summer holidays. Despite that, we think we'll be flat Q2 to Q3 in Europe. So all of that growth is coming from the U.S. Then I also told you about third-party reports talking about an increase of 5% on the permit side. So we talked about that. In addition, as a company, we have a platform called SolarGraph, as you know. SolarGraph basically also monitors all of the proposals for both solar as well as storage. And we are able to see an increase in proposals in Q2 as compared to Q1. That will reflect as installations in Q3. So triangulating all of these, we think, with the third-party reports, with our own internal data, and what we see on a sell-through basis, plus what we have on Propel, we think we will grow by approximately 10% in Q3.
And our next question comes from Phil Shen from Roth Capital Partners. Please go ahead with your question.
Hey everyone, thanks for taking my questions. First one is very topical. Just when your release hit for Q2 results, the FCC announced that they're working on a plan to ban Chinese inverters in the U.S. And so wanted to check in with you on your views on this. It doesn't really impact your resi segment too much, given the limited exposure or mix of Chinese inverters. but was curious, how much share do you think you could take in your commercial business as a result of this? Of course, you have been addressing just a limited portion, and now you're going to expand that to a larger portion of the C&I market. And so, how much Chinese inverters do you see out there, and then how much do you think you could grab of that? Thanks.
Yeah, I think there are two opportunities for us. One is, like you rightly pointed out, the residential is not really there, not an issue because of FIOC, etc. So the two topics are small commercial as well as utility scale solar. So I'll focus on small commercial for now because we haven't yet introduced any products for utility scale. In the small commercial, basically, we are seeing lots of opportunities, especially with big retail providers, both in terms of small size installations as well as big size installations. Our revenue that I expect in Q3 for small commercial in the U.S. is approximately $10 million. And I expect that number to grow from strength to strength as we advance through the year. We have introduced two products in the last 6-month period. We introduced one product in December. That is the IQ9N with GaN. It's a 3-phase 480 volt, addresses the 3-phase 480 volt market. And that's got a power of 427 watts. That can go up to, let's say, approximately 600 watt panels. We just introduced in June an IQ9S 3-phase product. That is 548 watts. That will be able to go up to 700 watts. So from a product portfolio, we are fully covered. We are having the right discussions with everybody. In addition, I talked a little bit about small commercial storage. Small commercial storage is a fantastic opportunity for us. The market is a little tough to estimate. It is anywhere from 1 gigawatt hour to 2 gigawatt hour. It's a very diverse set of installations in small businesses. You can say schools, hospitals, churches, gas stations, retail shops. The product we are introducing is ideal for that. 80 kilowatt hour cabinet can be scaled. 25 of these can go to a site, can do 2 megawatt hours. For example, in the building that we are in Fremont, we are going to have a megawatt hour of storage very shortly, comprised of 12 80 kilowatt hour cabinets. So there, for example, same concept, FIOC compliant, domestic content, and U.S. manufacturing. So we have the portfolio. We have both small commercial solar, we have small commercial storage, and we expect to be ramping not only this year, but 2027 could be big there.
Okay, thanks, Badri. Shifting over to the core U.S. resi solar market, the challenge that I see here, the root cause is weak capital flows and some challenges with the TPOs, and in turn, they're slowing down the amount that they're investing in. And so the root cause of that is driven by tax equity and their caution with the FIOC and effective control guidance that Treasury has still not issued. We published back in March that it could be by the end of the year. They're waiting to see how different Chinese companies are adjusting their corporate structures as well as their IP, and then they may want to close those loopholes. And then we wrote recently that it might not come out till the first half of 2027. So is there a scenario where the U.S. resi outlook could still be challenged even as we get through a bunch of 27, and how do you guys manage through that? Thanks.
Yeah, it is a good question. Like you said, I mean, there is limited visibility on the Treasury guidance, but the market is adjusting. The FIOP guidelines, etc., are reasonable. Our TPO partners are becoming a lot more mature. Yes, there have been some hiccups, but those hiccups are being solved. We are hearing that tax equity, although it is tight, but we are hearing it is likely to improve. For us, our opportunity is a few things here. Our opportunity is, I talked about sole source and Propel. That's a fantastic opportunity for us because it basically make the 25D loan market, which was getting approximately a 30% ITC, now has a chance to be replaced with the prepaid lease. That one. So that's the big opportunity for us. The second big opportunity for us is we are getting a lot better on batteries. So we are going to be introducing the 5th generation product in Q4 into the US, and that will be at a much reduced cost structure. So while we will make good gross margins, that will help. It'll enable us to help installers. With the positive reduction in tariffs that we got, we took the opportunity to make more pricing adjustments in order to drive volumes with our 4th generation product. Our 4th generation product is also ramping from strength to strength. We are now qualified at the meter collar is now qualified at 69 utilities, including Canada. It is by far the highest of any supplier. So, and we expect the same to continue, meaning with our 5th generation battery, all of these 69 can be reused. And they are also going to be a big differentiator for a standalone BiDi, because a standalone bidirectional charger can consists of the bidirectional EV charger which has got 11.5 kilowatt inverter. That's what we have. In addition to that, we have a meter collar. Just two components which will enable V2H, V2G in a seamless manner. So for us, we are not stopping and waiting. We are not waiting for things to improve. We are taking matters into our own hands. It is about innovative financing. It is about innovative new products. It is about extending our range into commercial. And of course, the big one is data centers.
Great. Thanks, Badri. I'll pass it on.
Thank you.
Our next question comes from Colin Rusch from Oppenheimer. Please go ahead with your question.
Thanks so much. Badri, can you talk a little bit about the elasticity of demand on the batteries? You talked about dropping prices a little bit. Just want to get a sense of how much volume you feel like you can start driving as you make those pricing adjustments.
Yeah, what we are doing is basically just to tell you some background here. There are two actions that we specifically took. One was in Europe, where we were high priced. There is no question, and we were high priced relative to the value we were generating, and that was clear to us. So earlier in the year, we did a pricing adjustment in Europe. In addition, in Europe, what we are extremely excited about is a business model change that we are driving. In addition to the B2B sales, which is Enphase selling to installers through distributors, we are actually generating organic battery demand from our own install base. And we are doing that in Netherlands. We are doing that in France. We are doing right now, you guys may not believe, 6 homeowner events a week in Netherlands. Each homeowner event is attended by approximately 150 sites or 150 families. And the yield on these is quite good, of the order of 50%. So what we are able to do is we are able to close these very quickly and then pass the leads to our installers. And of course, that requires sophisticated lead management to make sure the installers, after taking the lead, do not do any funny business and install only Enphase product. So we are doing that, and we are seeing a lot of success in Europe, both in Netherlands and France. So to answer your question, the actions in Europe are not just due to pricing, but what we are doing to generate organic demand. While the actions in the US, very similar. So pricing is only part of the equation. Product stuff, for example, the meter collar, which I said, we are qualified at 69 utilities. The other big one is Propel. Propel, by definition, has got, there we have a 75% battery attached in Propel. So that we expect that to be driving more and more battery volumes. So that is why in Q3 we expect shipments between 130 to 150, and then the big ramp will come from G5. The fifth generation product has got 50% energy density. What does that mean for you? It is, if you compare, for example, our third generation product and the fifth generation product. Why third generation? Because that's the one in Europe. The fifth generation product will be roughly 40% in 40% in height as compared to the third generation product. And similarly, it is also 50% higher, more energy density compared to the fourth generation product. So all of these improvements are going in. The fifth generation product we expect will start to drive even more demand, especially with the same meter collar qualifications, etc. So not just pricing action, but pricing plus a few other actions to drive demand.
Thanks so much. That's super helpful. And then looking at the data center opportunity, it sounds like you're making a meaningful impact on the actual design of the facilities. I'm just curious how mature pricing conversations are at this point, and how mature some of those designs really are that would embed the Enphase solution.
Yeah. So just to give a quick, complete overview, we're making very strong internal progress in our data center development, meaning IQ SST development for data centers. Our team now, we have about 120 full-time engineers. We are building the power module, and we are finalizing the design there. Interestingly, we demonstrated a 4.16 kV AC series stack.
You were really close to calling.
We can stack 15 power modules in series. So 15 times 277, approximately 4 kilovolts AC. We demonstrated proof of concept there. And importantly, we have achieved significant milestone on the feasibility of the medium voltage transformer. So that's on the technical side. We are making a lot of great progress there. On the active engagements there, we are engaged in conversations with hyperscalers, neoclouds, colos, EPCs, and the full ecosystem. We are engaged in a few RFI, RFPs. In fact, some of the learning that we got on the product were from those RFPs. It was massive learning for us. But then we realized how powerful our platform was, because we were able to get the product requirements, understand the product requirements from these customers, and then we were able to quickly rework our plan without any changes to the power module, because ours is a modular structure. And for example, we were able to quickly adapt. We talked about supporting two kinds of storage. One kind of storage, which is where your question value proposition comes in, is because our SST is super fast in terms of response time, sub-millisecond response times, we envision the storage can be in the facility space or in the black space. But there are people who have a current architecture who might not be willing to deviate from that, who would want to put high C-rate batteries closer to the rack. And for those hyperscalers, we enabled a DC-DC product in conjunction with the SST. And we were able to repurpose the same SST, same power module, in order to get that DC-DC product as well, in addition to the SST. So our architecture is very flexible. We are learning a lot. We are adapting a lot. We understand what our value drivers are very clearly. Like what I said, it is the fast response time. It is the power module flexibility. It is the high reliability, which is yet to be proven. It is U.S. manufacturing. What is the next big milestone? The next big milestone is to build a full product. Building a full product by approximately end of the year, likely November, and showing it to some of these customers will open the gates for much bigger conversation and pilots. So we are looking forward to that. And right now, as I see here, we are on track to getting that done.
Our next question comes from Eric Stine from Craig-Hallum. Please go ahead with your question.
Hey, Badri. Just wondering, can you just talk a little bit about your thoughts on Europe or expand on that? I know last quarter you had some cautious optimism that there were some green shoots. I mean, clearly you're more optimistic here coming off of Q2, and I know that that's really going to be more of a battery-driven market, but I mean, how do you view that? It sounds like 3Q flat, even with taking into account seasonality. Is that still kind of driven by a few markets? Is that something that you think it's becoming more widespread? Just how are you thinking about that here, I guess, over the remainder of 26 and going forward?
Yeah, so just to recap, in Europe, we increased revenue by approximately 35% in the second quarter. And more importantly, our sell-through grew 30% with strong performance across both solar as well as batteries. What markets am I excited about in Europe? 3 markets, which is basically Netherlands, France, and Germany. And in Netherlands, as you know, because net metering is expiring at the end of 2026, there is a huge interest in batteries, and that is starting to materialize. And our activations basically increased by about 100% compared to, the activations in Q2 compared to Q1. That increased by 100%. We have staffed our internal sales representative team, about 10 people and 10 sales folks who manage leads that come from the homeowner events. These homeowner events we haven't done before, but we are now ramping up on those. We started them nine months ago. We are now ramping up on those in a systematic fashion. We are talking 6 homeowner events a week, which is approximately something like 75 to 80 a quarter, 78 a quarter. So that is generating a lot of interest, and it is a flywheel because once we help installers are likely to reciprocate. So there, I think the inflection curve the inflection can be very big because the deadline is approaching. NEM is going to go away. And the only way that consumers can be protected is if they have self-consumption, which is solar plus storage. Now, coming over to France, one more thing which I left out in Netherlands. We have a base of 500,000 solar homes there. So that is how we are able to do the homeowner events. That is how we are able to generate the battery leads, which we are, we will continue to do. In the case of France, we have about 400,000 solar base in France. This is Enphase homes. And in France, the economics are slightly different. In France, feed-in tariff is quite small for new installations, but for existing installations, they are still grandfathering net meter. But, however, there is high sensitivity, maybe because of the war, I'm not sure, but high sensitivity on energy independence. So in France, we find that it is almost to the same level as Netherlands, if not higher. And we have exactly the same model there too. We are driving both demand organically from homeowners as well as working with our installers. And that's going fine. So those are the two most exciting things that generate a lot of results. In the case of Germany, very attractive market. We have, I should say, we have not yet exploited that to our fullest potential. Of course, we do have some fantastic partners there who are helping us, and I think we are going to grow from strength to strength there with our 5th generation battery, which is going to help us everywhere. So we are quite bullish. And the last one, I have an excellent management team in Europe. We put an Enphase veteran in there, and he understands how to work with the internal teams to get products as well as understands customers very well. So part of our performance is attributed due to him in addition to his sales team as well. So we are extremely bullish about Europe.
All right. Thank you.
Our next question comes from Dylan Nassano from Wolfe Research. Please go ahead with your question.
Yeah, hi. Thanks for taking my question. I just wanted to check if you had any updated views on the kind of shape of the cash flows from that $880 million physical work test backlog. Just for modeling purposes, should we be amortizing that over the next couple of years? Is it more back-end weighted? And then how much, if you could, in the forward guidance for 3Q and 4Q, how much of that is 5% rule versus physical work tests?
We already told you that, but let me repeat. So the 5% physical work test, essentially, just to give you a full context, in Q1 26, we did approximately $34 million. In Q2 26, we did approximately $84 million. In Q3 26, we are guiding to $75 million. And in Q4, we already gave you a number that it's about $61 million of safe harbor. So that is the 5%, and the 5% is done. Then, the more exciting thing is physical work test. In physical work test, according to what we said, we have about $878.6 million is what we have signed this year. Plus, we signed one agreement last year too. We haven't recognized any revenue from any of the physical work test shipments yet. any of the physical work test that is signed this year, we haven't recognized any revenue yet. That revenue, when will it be recognized? Is according to me, likely beginning 2028, because that is the whole point of safe harbor. The tax credits remain open till the end of 2027, and from 2028, they would have to utilize this PWT inventory, physical work test inventory, and they would ask us to make microinverters with that physical work test product. So we will see normal microinverter run rate, we will see accessory run rate, we will see battery run rate if they decide to attach batteries. So it's a long answer. It's quite difficult for us to predict. However, we think it'll be linear. We think it'll start 2028.
Okay, great. Thanks for clarifying that. And then just quick follow-up on the tariff impacts in the guidance, specifically for batteries. So, I know in the past you had talked about kind of shifting your cell supply. Can you just update us? Have you completed that? Is there any more cells that you're getting from China? Yeah, thanks.
Yeah, in general, the tariffs have come down under control. We talked about we had base tariffs, let's say approximately a year ago, we had base tariffs, and then we had this reciprocal tariff that was introduced by this administration. We said because of reciprocal tariffs, we had approximately 5% gross margin impact. So our gross margins came down to the mid-40s. But then with the recent rulings, that impact, the reciprocal tariff impact, has reduced from 5% to 2%, which is quite positive for us. What we have done, again, we are not, we are taking our own actions. Our microinverter supply chain has diversified quite nicely. So if there is any further tariff, for example, in a region, we can always move to another one. To answer your question, yes, we have other than China, we have a non-China cell source as well, which we are able to leverage in the event in the event the Chinese batteries have a much higher tariffs, we can always leverage that. So that is, we bought that into production. And as we go more, we are looking very hard at U.S. sources as well. As we get into more commercial battery, as we get into the our 5th generation and 6th generation battery, we are also looking at U.S. made cells, and we have a lot of suppliers there who want our business.
Thank you.
Our next question comes from Corinne Blanchard from Deutsche Bank. Please go ahead with your question.
Hi, good afternoon. Maybe just coming back to the SST, and maybe this has been already a little bit addressed, but I wanted to come back on what has been the feedback you have received from customer, and maybe if you can share some detail on which kind of customer relationships you're trying to look for and achieve. And then I would have a question on the European market after.
Hi, this is Raghu. I think as Badri mentioned, we are talking to the entire ecosystem of SST, of the data center market, which includes, of course, the hyperscalers, the colos, the neoclouds, EPCs, etc., all the way even down to some of the server providers as well, because we want to make sure that the solution that we are providing, it's not just a product, it's an entire solution set from medium voltage to rack, as Badri mentioned, is covered, that we are addressing all the entire issue. And the feedback has been quite positive. We have a very unique solution relative to what others are done and what's been done academia is that we have a fully distributed architecture where we have hundreds of these power modules. And each power module is undersubscribed by about 10%. So the key value proposition of reliability plays very well. Plus, we also point out our history of almost 90 million microinverters shipped to date with a 500 DPPM failure rate. So the combination of historical performance plus this architecture, which is fully distributed, really resonates very well with a lot of the players in terms of reliability. Now, we also talked about, we have some intrinsic structural advantages in terms of cost, right? The components that we use in our products, they're all off-the-shelf, generally available parts, almost commodity parts, including GaN. We consider GaN to be any more commodity, so that helps us a lot on cost. We do what's called soft switching, and soft switching enables us to have a very, very light EMI footprint. And a light EMI footprint means that we can package this device, this power module, in a engineered plastic enclosure, and that again drives costs. And since it's only 4 kilowatts and very, very efficient, thermal management is also very easy. Combine all of that with high volume manufacturing, and that is a standard line that we use today to manufacture microinverters. We have some intrinsic cost advantage as well. So the combination of the value drivers that we talked about in terms of reliability, in terms of response time, which is sub-millisecond response time that can help eliminate the need for that high C-rate battery from the 800-volt section and rely on the BESS to do all of the work. Those are the things that are resonating very well. And of course, U.S. manufacturing and a FIAT-compliant supply chain are all very positive feedbacks that we are getting.
Great, thank you. And maybe the second question, can you talk about the European Cyber Act? I think, we met with your team in Munich in June, and I think there was a lot of focus during the Intersolar on the Cyber Act 2.0, but just wondering, what's your latest view and how do you think it could impact you?
I think we are fully tuned into all of the developments that are happening there. I think the key here is to make sure that we are ahead of any of the compliance requirements. And so far, we are giving this incredible amount of importance. We have a person there who's exclusively focused on all of these new requirements that are coming, and we have already met a number of the requirements. And any new requirements that are coming around cyber, we continue to meet both in Europe as well as in the US as well. We understand that both inverters, SSDs, etc., or anything what are called as inverter-based resources are going to be classified as critical infrastructure, and so they will have an additional layer of scrutiny in terms of communication layer that each one of these devices have, and how are they managed, and all of the other security requirements or cyber requirements that are needed. So we feel like we are on top of it. We feel like we are ahead of the curve there in meeting all of the requirements.
Great. Thank you so much.
Once again, if you would like to ask a question, please press star and then 1. To withdraw your questions, you may press star and 2. Our next question comes from Vikram Bagri from Citi. Please go ahead with your question.
Hi, it's Ted on for Vic. Thanks for taking the questions. I wanted to just go back to the guidance, if we could maybe just touch on some of the assumptions there. The Netherlands storage activations were over 100% this quarter. Could you share what the guidance assumes for activations in 3Q? And then just going back to the comment about under shipments, could you just elaborate on what the source of that caution is? Is it to do with EU demand? Is it a seasonal slowdown? Is it interest rate driven, or is there anything else in there? And then I have a follow-up.
Yeah. So typically in Q3, there is summer seasonality in Europe. So basically, we expect more or less flattish performance from Q2 to Q3. However, we think from Q4 onwards, particularly in regions like Netherlands, which are seeing the expiration of net metering, there is going to be a big breakout on batteries. And we don't usually break out volumes by region. That's why we gave you a percentage. And the moment it becomes big enough, we will start breaking that down. But that's what we are the most excited about. There is, Enphase has got 500,000 solar homes, and all of them are going to be scrambling. I mean, many of them or I should say, a small fraction of them have converted or added batteries, and many of them are going to be scrambling in between now and the end of the year, so that they can be ready when net metering goes away.
Thank you.
On your other question that you asked in terms of the undershipment, look, what I said, this question was asked before. What I said is our sell-through basically is approximately $245 million forecasted in Q3. And we have a modest undershipment there, so of approximately $15 million. That's why our core number is 230, plus safe harbor is 75. So that's how you get the 305. So it assumes a modest level of undershipment, not a lot, and it's just out of caution, that's all.
Got it. Thank you. And then in terms of the SST product line, is there any clarity on what you could recognize from a 45X standpoint? And then just to clarify in terms of expected needs for that product, is that a 2021 or a 2028 event?
Yeah, we expect, we have previously said this volume shipments in 2028 and pilots in 2027. With regarding 45X, we are working through the details, and once we have a good understanding, we will be able to share more information in the upcoming quarters.
Got it. Thank you.
Thank you.
And once again, if you would like to ask a question, please press star and 1. And in showing no additional questions, I'd like to turn the conference call back over to Badri Kothandaraman for any closing remarks.
Yeah, thank you all for joining us today and for your continued support of Enphase. We look forward to speaking with you again next quarter. Bye.
There we go. There is the Enphase Energy earnings. Interesting. Going to break down all the numbers, and don't be surprised if we don't see them tomorrow in Sensei's newsletter. Look through the numbers. Interesting company. A lot of potential. Everything sounded great there. There's a lot of good stuff coming. A lot of you mentioned it comes down to interest rates going down, and it's going to come. So this is a kind of accumulation stage of Enphase Energy. For me, it's the leader in this space. Now, all the way through that, I was taking notes, and we're going to process it all. We've got a lot to cover. Tomorrow morning, we've got SoFi earnings, the start of the fintech. Robinhood will be next in the afternoon. So we've got, or the next day, rather. We've also got the FOMC report tomorrow. This is our biggest event of the quarter. Biggest event. The FOMCs are always our biggest events. Will we get a rate cut? Will we get a pause? Will the market crash, pump? We're going to also keep our eye, of course, on on SpaceX, trying to sell some more at the top, bring those lots down. So we're going to be working very hard tomorrow on SpaceX. Been watching it all the way through the call. Coca-Cola as well. We're going to get a re-entry. We're looking to find an entry back into Virgin Galactic as well. But SpaceX is pretty much flat tonight. Coca-Cola is also trimming off from its $90, and Enphase Energy, we could see some movement tomorrow. I think it's quite a positive earnings. Right. What I'm going to do now is send you all over to the extra channel. We're about to publish all the events tomorrow. In the next half an hour, you're going to see SoFi earnings first, preparation for the FOMC, then the FOMC report, then Sensei will be live doing a how do you trade it we're out with our usual playbook and all the rest of it. After hours tomorrow night, we have another earnings, and it is, I've just completely forgot what it is. It's going to be Microsoft and Meta. Double earnings tomorrow night. Double earnings tomorrow night. So look out for that. Big, exciting day. A lot going on. So there you go. It's pinned at the top. The extra channel, it's all ready to rock and roll. I'll see you over there. There is no, of course, a Discord event because of the earnings. When we have earnings, it's difficult to do 2 events, but we had our event this morning. And if there's anything really important, of course, anything breaking out, I'll always come and do an extra one anyway when we have earnings if we need to fit something in extra. But that's it from me. Thank you very much indeed. I'll see you in the morning for SoFi. Preparation for FOMC, the playbook, the newsletter. It's all been pinned in the chat and below in the description. Then we've got how to trade the FOMC. Then we've got Microsoft and Meta earnings. It's going to be a huge day tomorrow. Get ready for it. And don't forget, if you are a member of the channel, a $10 super chat, you can book in an earnings. Going to keep you updated throughout the night on Discord with my trades, of course, as I always do, and YouTube Electrum. That's it from me. I'm just about to post all the events for the morning. I'll see you then. And in the meantime, take care of yourselves and each other. Bye-bye for now.